Warm welcome once again to all of you. This is A.K. Snani from Smart VRC Bhopal, and this is our webinar number 122. Thank you, participants, for making this series such a huge success. Thank you once again. Yes, when you are registering, then we do have your details with us, but have a trust on us. We never share this data with any agency. Your audio is in mute mode, and of course, regarding your video, regarding your camera, you can put it on, but be very careful before enabling your video. So the today's topic is when and how to average in stocks. Yes, average means buying more at a low price and at times at high price too. Yes, that we will see. The average expected duration for this presentation is about 30 minutes. As usual, most of the time we start with a poll, and this time again, the poll question is this the time to invest fresh money in stocks? Because the topic itself is this the time to average? So is this the time to invest fresh money in stocks? Options are only two, yes or no, and poll will appear very soon on your screen. Hope you are able to see on your screen and are able to reply. To cast your, I can say cast your vote. So this time I see a very quick response. 70% of the participants have already participated. 10 seconds more. I request all of you to participate. There is nothing to be, nothing to lose, rather I should say, nothing to win, nothing to lose. Well, 78% of the participants have given their response, and answers are like this. 87% say yes and 13% say no. Okay, 87% of the participants, and most of them are long-term investors. I know very well because I am a strong believer of medium to long-term investment, and 80% of the medium to long-term investors say that yes, 87% rather, it is time to invest or it is time to average, and only 13% say no. Let's see how, when we go to the next slide, next couple of slides, we will come to know whether it is at time or not. It depends on individuals' portfolio or individuals' stock price movement. Thank you for your participation. So the today's webinar contents would be like this. Who should do the averaging? Yes, not all are required to do the averaging at this juncture, at least in our opinion. Why averaging is beneficial, means why it should be done. And when it is advised. Yes, it is not necessary that with every certain level of share price coming down, you have to keep on averaging, because we have got a limited fund. How averaging should be done? Okay. Is repeat averaging advisable? That is also a good question. And is upside averaging advisable? Upside averaging. I'm very sure very few of you might have heard this, averaging on upside. That is pretty interesting. What should be the source of averaging? Source means money. From where you should get that money to average. And then the questions and answers, or I should say very interactive question and answers. So be ready with your questions. So here we go with the first topic. Who should do the averaging? So who should opt for averaging? The first category of investors is short-term investors. When I say short-term, that means that includes anything and everything. I can say less than 3 months. So if you are investing for less than 3 months, or if you are investing for, say, maybe you are a day trader, then definitely averaging is not required. And anybody who is investing for less than 3 months or 6 months, even 6 months, then you should avoid averaging, because 3 months or 6 months is such a short duration that you may not get an opportunity to make an exit at profits. So rather, one should avoid averaging if you are investing for less than 6 months. So the second category is medium-term investors. When I say medium-term, that means whose investment horizon is from 6 months to 24 months, that is 2 years. But yes, so in my opinion, that is a medium-term investor. And for him, it depends, because he may be betting on the yearly results or maybe betting on next year results. So averaging can be done, but it all depends what kind of stock he is holding. If it is a low growth stock, then averaging may not help you. And in most of the cases, investors are invested in low growth stocks. So as far as possible, try to avoid and go for averaging only if you have very strong conviction. Then long-term investors, yes, big yes. Now the second question arises, why averaging is beneficial? Okay. Beta. This terminology, I'm sure you are aware of. Beta means how fast or how slow the stock moves with respect to the market. Suppose the market is up by 5% and the stock also moves up by 5%. Means what I mean to say is the historically. Historically means you can consider a past 1 year period. If you find that the movement is stock movement price is in tandem with the BSE Sensex, then you can say that the beta is unity. But if the market rises by 5% and your stock also and your stock rises by 10%, then you have got a stock with a beta value of 2. So if you have a stock which has a beta value of 2 and the market is down by about 8% during from the peak, recently reached peak, and that means your stock is down by about 15%, then definitely you can think of making buying more stocks so as to average down your cost of acquisition. So that is, one is beta. Second is market inefficiency. What is this market inefficiency? Whenever there is a sharp movement in the whole market, like last year in March, in the month of March, you are all aware how fast the market fell down. Whenever there is such a sharp movement, there arises lots of opportunities in terms of the inefficiency in the market. Lot of good company stocks with very sound fundamentals and very good growth prospects, they fall down much faster than the other stocks with much lesser good prospects. So that is the time to average. So those opportunities we get very rarely, and I can say not even once in 4 years or 3 years. It takes about 6 to 7 years to get those kind of opportunities. But of course, even in the medium term, there are times when the Sensex falls down by 500 or 600 points consistently day after day, and then some inefficiency arises in the market. So that is the second point. And that gives you an opportunity to bring down the cost of your acquisition. And that is how it is beneficial, right? Now, point number 3, when averaging is advised, right? That is a very crucial question. And you have to be very careful while averaging. When I say when means, I will give you an example. Suppose the share price is 2000 rupees and it falls down by rupees 200. Then I've seen many investors who go for averaging. They said that the share price is down by 200 rupees. It's a big amount. And the same share price, if it is 2 rupees and if it falls down by 2 paisa, will you average down? No, probably not. Or even if it is 20 paisa, then on 2 rupees it is 20 paisa, then 10%. 20 paisa you may not do, but you may do average at 1 rupees 70 paisa or 1 rupees 60 paisa. So don't go by the absolute term. 2 paisa on 2 rupees is only 1%, but 200 rupees on 2000 rupees is 10%, right? So always go by the percentage. Don't do averaging on 1%, 2%, 3%, or even up to 5%, even up to 10%. Why? Because when you average, you buy, and also at some point you will sell. And also there is a difference between the buying and selling price. So whenever you are buying in a cash market, you are paying a brokerage of about 0.3%. Also during the selling, you are paying 0.3%. And there is a difference in buying and selling price for about 2%. It depends, maybe about 2% or 3%. So total, it sums up to about 4%. So 4% is already lost. So if you are doing averaging when the share price is down by 4%, you are not doing any good. So you should have at least, in my opinion, at least 15%. And not only that, for that you need to have very strong conviction in the underlying company. Yes, you should not opt for averaging if you don't have that strong conviction. And as I said, the stock should be down by at least 15%. Or there is one more case scenario. Suppose you have allocated a weightage of 5% in your portfolio, and for some reason the stock falls down and the weightage in your portfolio falls down to about 4.5%. So now you have an opportunity to bring it back to 5% by buying 10% more quantity. That also gives you an opportunity. Yes, that can also be one of the reasons. So these are the basically two reasons. Number one is you should have a strong conviction. Even if you have a strong conviction, then there are two cases arises. Either the stock is down by 15% or the allocated weightage has come down. So these are the two case scenarios where you should think of averaging. Now this is something offbeat type of question, offbeat type of poll, I should say. From the peak, BSE Sensex is down by 8%. Okay, peak was something about, I believe, 62,000, and presently it is at 57,000. So it is down by about 8%, and market capitalization is down by only 5%. So what is the reason for the difference? Are you getting my point? BSE sensitive index is down by 8%, while the market capitalization is down by only 5%. Why it is like this? Is it because of the increasing number of IPOs? Or is it because of the mid and small cap stocks? Or is it because of the new age investors? They are buying, they are entering more and more into the market. Or the Sensex is not correctly representing the market. This can also be the reason. Maybe, you know, maybe I will say whether you, how much we can, what we can interpret from these options. And here you get the opportunity to participate in this poll. So the first option is because of IPOs. Second option is because of the mid and small cap stocks. Third is because of the new age investors. And the third is Sensex is not correctly representing the market. I hope the question is very clear. BSE Sensex is down by 8%. Also, the Nifty is also similarly down by 7 to 8%. But the whole market capitalization of the stock market is down by only 5%. What could be the reason? So the response is pretty sluggish and low. I request all of you to participate. Well, we are coming to the end of this time for participation. So 73% of the participants have given their verdict. So answers are like this. 21% says it is because of the IPOs. 32%, and that is the highest, they say because of the mid and small cap stocks. 18% says it is the new age investors. Okay. And 29%, a good 29%, have gone for the option 4, that is Sensex is not correctly representing the market. So we'll go one by one. IPOs, yes, if the market, from the peak of the market till date, new IPOs are coming. So new market capitalization is getting created. That is one part. And also, we are all aware, many of the recently listed IPOs, they are commanding very good market capitalization, up to lakhs of crores. So that is one of the reasons. Mid and small cap stocks, no, every mid and small cap stock is a part of the market. So even if the market is down, all stocks are down. And mid and small cap indices are also almost down in line with the same BSE, Sensex and Nifty. New age investors, they have nothing to do with the market capitalization. And coming to the fourth, Sensex is not correctly represented the market. Yes, this can be the reason that Sensex, because Sensex is a basket of only 30 stocks. And most of those stocks are large cap stocks, and the companies are the leaders in their sectors. So this can be one of the reasons. IPOs can also be one of the reasons. So thank you, participants, for sharing your thoughts. Well, now we are taking a small kind of a pause in a sense, pause from the continuation of the presentation. How we at Smart VRC can help you in creating wealth from stocks. As you are aware, I am A.K. Asnani, the founder and owner of Smart VRC. In our team, there is a marketing head and Mr. Kishore Purswani. He has got an investment experience of about 36-37 years. I myself have an experience of 32 years. So cumulatively, we have an experience of more than 65 years. And that is sufficient, I think, to guide you. And not only that, not only it is the experience, but we have learned a lot many things. And we have proved it again and again through our performance of our various products, that how to create wealth. So we can help you through stock advisory, of course. Smart Insights Pro is a set of videos, short videos of about 18 to 20 minutes each. And there are 4 categories of videos, and each category has a different set of videos, exclusive videos, and the categories are like equity research analysis, controlling emotions, how to manage a portfolio, how to get financial freedom. These are the 4 categories. And each video is followed by a question and answer session. Then I am author of the book, Way to Billionaire. This book is available in English as well as Gujarati version. You can, if you want, you can buy from the website. No complex calculations or equations, very simple and easy to read. Then we have financial freedom calculators on our website. These are freely available. And the website to be visited is smartverc.com. It is secure, HTTPS. It is secure. You can securely make the payments. And this is how our website looks like. Under the products, we have Smart Gains, Smart Multibagger, Freedom, Smart SIP, Dr. Smart, and a product comparison also. Then we have Smart Academy. Under this, there is information about the seminars and workshops. This is how you can purchase the book, Way to Billionaire. Then we have Smart Insights. This webinar, what we are doing, is recorded, and this will be available under Smart Insights. Similarly, all the past webinars recordings are available under Smart Insights. Then we have Smart Insights Pro, that is a collection of videos, what we have discussed. And then other things, Celebration and Smart Report. Smart Report is in occasional reports. We come out from time to time. And this is not the part of our regular services. Then we have resources. Under this, what investment philosophy we use, how you can check your risk profile. There is a retirement calculator. You can find out how much money you need at the time of retirement, because there is a component called inflation, as you are all aware. And then there is an investment calculator, that how much returns you need with the present investment and also with the regular investments monthly or yearly, that you can reach to your target at the time of retirement. Then we have FAQ. So this is all about the website. And for subscription, there is a link with the name of subscribe. When you subscribe, you will set your own password here, and this is your email ID. After subscription, immediately your subscription enables. It is all automatic. So this was all about the stock advisory. Now, among these four, we are covering today only the stock advisory part. These are the this is a comparison table. We have Smart Gains, Multibagger, Freedom Stocks, and Smart SIP. This is the start date. As you can see, this is the oldest one, started about 22 years ago. Smart Gains. And then we have Multibagger, operating from last 14 years, Smart Freedom from last 6 years, and Smart SIP from last 5 years. This is perpetual, means this will keep on continuing. This is also perpetual. This has got a target date of 31st December 2025, because it is a basket of stocks. And this is again perpetual. Target compound returns in Smart Gains, it is 25 to 30% annualized. In Smart Multibagger, it is 30 to 40%. Freedom, 20 to 22%. Smart SIP, 18 to 20%. And in line with the target returns, the risk is medium here, low to medium, and low. Advice type, individual stocks. In Smart Gains, yes, we give individual stock advice every week. And here, Multibagger, again, once in a month average. And then in Freedom stock, there is no individual stock, but it is a basket. This is covered into the second category, that is the basket type of stock. And in Smart SIP also, it is a basket. Also, there is a basket in Smart Gains in the name of Smart Billionaire Picks, and most of you are aware, started about 21 years ago. This basket is delivering returns of 27% CAGR. Yes, 27% CAGR means doubling of your money in little less than 3 years for 21 years in a row. That is a fabulous performance. Holding period here, it is 3 to 24 months. Here it is 2 to 5 years. It is long term. Sell advice, yes. In all the products, we give you the sell advice. So it works in a closed loop. It is not that once we give you the buy advice, then it is not our duty to track. We keep on tracking that stock until and unless we give you an exit call. And in each of these services, once you subscribe, you will get an access to the past advices. Yes, for past couple of years, you get an access to each and every advice. Allocation we give in Smart Gains. Allocation means how much weightage you should have in your portfolio. In multi-bagger also, we provide you the allocation, in Freedom also, and SIP also. So allocation plays a very crucial role in deciding your total portfolio returns. All the advices are provided during the market hours. Yes, at the current price. We are not giving you any set price that you should invest at this price only. You have to invest at the ruling current price. Philosophy is same. One should know the worth of the stock. That is the crucial thing. Until and unless you know the worth of the stock, you are playing in dark. You do not know what you are doing. Market cap, in smart gains, all market cap, multi-bagger, all market cap, smart freedom focuses on large cap, and smart SIP is more focused on large caps. Advice frequency, this is on every Wednesday. This average once in 25 days, same here, and this is on the 5th of every month. Subscription term is only for 1 year for all the products. And this is the subscription prices. These are excluding GST. GST is 25%. So this was all about our advisory products. Coming back to the webinar presentation, and we were here when averaging is advised. Now next is how averaging should be done. Okay. So you should be very patient while averaging and have a complete due diligence. Due diligence means check it again and again, again and again. This means you are doing the right thing because you are increasing the weightage when you are buying the same stock again. Maybe you are increasing the weightage or you are investing again in that stock. So you should not make any kind of mistake. Otherwise, what will happen is throwing good money after bad. That should not happen. Is repeat averaging advisable? Yes, but under what circumstances? Only if you have very strong conviction in the story, right? And maximum 2 times. Why 2 times? Because you have got limited cash with you. So you cannot keep on averaging. That is why I gave you a percentage of 15% from your last purchase price. I will give you an example. Suppose share price is rupees 100, right? And for some reason, it falls down to rupees 85. So it is 15% lower than rupees 100. So at 85 rupees, you can add some shares, some more shares. And now if the stock falls down to say 72 rupees, then again, you can think of adding more. Now, if the share price falls to rupees 50, now that is very scary. If the market has not fallen to such an extent, that means there is something wrong with your stock, with your company, and you are not aware. So market is aware. So be very careful. And that is why I always recommend not to add more, means average more for more than 2 times. Restrict it. That is the reason. Now, I told you that under Smart Billionaire Picks, there is under Smart Gains, we have a part of Smart Billionaire Picks. And you will be surprised to know that even after such a steep increase in the SBP value, we have increased from about 42 lakhs on 23rd March 2020 to presently 1.35 crores, 1.34 crores now. Now SBP, after even such a outperformance with respect to the index, this red line is index and this blue line is SBP, Smart Billionaire Picks, right? Even after such a sharp outperformance, when the Sensex is down by 8%, SBP is down by only 7%. Why? Why SBP is down by only 7%? And there are reasons, and we have made certain key decisions and implemented in SBP during last couple of months. And most of them are like this. Since, as you can see, it is a long term. We are here from last more than 20 years. SVP is in existence from last more than 20 years. We are always thinking for long term, right? So we are not much bothered about what is happening in the IPO, in the presently, and or what kind of stocks are moving presently. It is not like that. We are always thinking of long term. What will happen 2 years, 3 years hence? That is thinking ahead. And that is how we have outperformed the market, because we always thought ahead. Presently, in the month of March, April, May, what we thought of, there was no vaccine, no news when the vaccine will come. What we thought of is 3 years, 4 years hence, what will happen? After 3 years, after 4 years, there won't be any COVID, or there must be, all the world population must have been vaccinated, something like that we thought of, and we purchased the stocks. Fundamentally, very sound stocks we purchased, and available, those stocks were available at throwaway prices. Yes, and that is how we outperform. Again, at this juncture, we are including the stocks which have hardly to do with the present circumstances. We are thinking of 2 years, 3 years ahead. And of course, as I said, without knowing the worth of the stock, you cannot outperform consistently the broad stock indices. And we always believe in positive stories. We don't have any turnaround kind of stock in any of our schemes. So we always believe in positive stories, growing stories. So that is the success secret. Is upside averaging advisable? That needs a lot of courage. Upside averaging when it is possible. I will give you an example. Suppose you identified a new stock which has very good potential, and you want that portfolio should have that stock, and you want that stock should have a weightage of at least 8% in your portfolio. But 8% is pretty high. So in one go, you cannot have an 8% weightage. It is very difficult to get that strong kind of confidence. So normally what we do is we start with 2% or 3%. Suppose you have included 3% in your portfolio with a stock weightage of 3%. Now, after 2 months, stock starts moving up, and you find that the stories are appearing in the media, stories are appearing in the pink papers, stories are appearing in television, and stock has started moving up. What to do? Don't give a second thought, because you have already done your homework. No issues. Even if the stock is up by 20% or 25%, you should go and grab the stock and increase your weightage. That is known as upside averaging. I will give you an example. I think in March or May 2011, we identified Bajaj Finance. At that time, it was rupees 62, right? When I advised that stock, I immediately got a very strong reaction from our subscribers. Sir, this stock is already up 3 times during last about 18 months, and you're recommending this stock. And that is exactly my response was. It is not what has happened in the past. It is what we are seeing into the future. Of course, I was not seeing a price of 6,000 rupees or 7,000 rupees 10 years down the line. But even at rupees 62, it was available at a PE of only 8. That is the confidence one should have. And not only that, we have recommended this stock almost every year in our various services. Till last year, we have recommended Bajaj Finance in 2 of our services. So upside averaging, yes, it is advisable, but then your stock should be underweight in your portfolio, and you should have a very strong conviction. Also, there is a case for strengthening story. Means whatever you have considered is okay, but over a period of time, you find that the story is getting better and better. That can be one of the reasons. I will give you an example. Now, there is an example of Accresil Limited, and this is a very recent example. And you can see it is actually downside up. I mean to say, first time we advised in smart gains on 16th of December. So just exactly a year ago, we recommended. At that time, the share price was 173 and the target was pretty small, 200 rupees. Okay. Present price is 859. Now, it is not the present price what I am focusing here. My focus is I recommended at 173 with a weightage of 4%. And this is the complete PDF report. Investors can always click here and read the report. And this was the target price, 200. Now, there is one interesting thing. The stop loss pretty deep at 130 rupees. Now you see the difference. Stop loss at rupees 43 rupees below the ruling price, and the target is only 27 rupees up. So because we had a very strong confidence on the stock, so we were not willing for the investors to let go this stock, even if it goes down by 10% or 15% or 20%. So that is why we kept the stop loss so low. And then, yes, it hit the target within a couple of months. Now, my point is like this. When it achieved the target at rupees 200, after 5 months, we again recommended the same stock at a price of 346 rupees. This is very interesting. After achieving the target at rupees 200, we recommended the same stock at 75% up from the last target. And it achieved the target of 450. Once again, just after 2 months, we recommended the stock at rupees 590, again 60% up from the last recommendation, and it is almost I think 30% up from the last target. It again achieved the target of 667, and once again the stock reacted. This time it was not up, and fortunately we got an opportunity to buy it at a lower price, but then the target was again pretty high compared to the previous targets, and then once again we achieved the target. What I mean to say here is, every time during last 12 months, 4 times we recommended the same stock, and every time it achieved the target. And every time the buying price was much above the last target price. How? This is sheer confidence, strong conviction in the story getting better and better. With every quarterly result, company announced expansion. Companies got very good response for its products. So this is how you can use this as an averaging also. It is now, for some of you may be thinking that if the stock was so good, then why we exited? Because the product is like that. Because it is a positional call. Yes, in the second part, we have a smart billionaire picks. As I said, there it remains to be a part. It continues to be a part. There we are enjoying the multi-bagger returns in the long term. It is not only aggressive, as I said, even in Bajaj Finance, we did it. And recently in Precision Wires, it happened. We recommended at 202, target was 250. It achieved the target. We recommended once again within 3 months at 302 rupees, and it achieved the target once again within few days. Presently, the price is 396. This is another example, and very recent example. This happened during last month only. We recommended this stock. So this is how to create wealth, to increase your profits from the same stock. Source of averaging. Source means the money. Ultimately, it is the money. I always keep on saying that remain invested fully, always. Then from where the money will come. First is infusing fresh money. Of course, at times, those who are in service, they must be getting a salary on the first of the month. So that is one way. You have got a small amount of money to invest, or you may get a bonus or if you are in bonus, if you are in business, then also there is a possibility that you get a continuous flow of money. So there is one source, but this cannot be a big source of increasing the weightage, averaging when the whole market is coming down. Second is rebalancing the stocks. What is this? It is like this. Suppose you have a stock like ITC in your portfolio, and you have a stock like Bajaj Finance also in your portfolio. If the market falls down by 50%, I'm very sure ITC is not going to fall by 50%, and Bajaj Finance will fall much more than 50%. So this way, what happens is your weightage changes. Now you can realign your weightage by selling ITC and buying Bajaj Finance. This is rebalancing of stocks. This can be one of the sources of averaging. Third is selling stocks. It may happen that you have got 18 stocks and market falls down by a good percentage, and now you are not finding enough resources to invest, and some are very tempting stocks. What should we do? You can find one or two stocks from your portfolio wherein you have the least confidence. Among those 18 stocks, sell those stocks and buy the more tempting stocks. That can also be one of the source of averaging. And last but not the least, if the markets are down, if your portfolio is down by 50% or 60%, and you find that all the stocks are very tempting and all the weightages are perfect, then there is an option that in your bigger portfolio of assets, when I say bigger means it is not only the stocks, but maybe you have investment in gold or commodities or real estate, you can encash some money from the other investment assets which have not fallen that much and increase investment in stocks. That is the fourth option of source of money. This I've showed last time also, though markets are down during last 2.5 months by 4.1%, and the stocks advised under pick of the week in smart gains are up by 2.43%. In multi-bagger also, we are doing pretty well. So average returns are 19.91%, but this time it is for the whole of 2021, while the Sensex is up by only 13.7%. Now the question, each of us are very much worried whether the market has peaked. Now there is a share price chart, but a BSE Sensex chart. And this we have, all these charts we have taken from Google Finance. Credit goes to Google Finance. And this is a BSE Sensex chart from 4th April 1986. At that time, the index was 590 points only. I started in 88. That time, Sensex was about 850 points. So just a coincidence. And as you can see this, can you say that when the market has peaked? If you are a long-term investor, market never peaks, because every time after 2 years or 3 years, you find a new peak. As you can see from here, market never peaks. It is the perspective. If you are a long-term investor, then market has to peak. New peak will come every time. That should be the perception. That should be the mentality. Don't think of the short-term peaks. With this, we have come to the end of this presentation. And those who are interested to get information regarding such kind of webinars and other very good articles or the quotes or the wisdom we share in our groups, they can send their name and city at this WhatsApp number. This number is appearing on your screen on my video also. This number is 9755920780. Right? This is the number, and we will include you in that number. And if you are already present in one of those groups, WhatsApp groups, then no need to send it again. Coming to the smart world, one should understand that the stock market leads the economy. We all know that stock market is a barometer, is known to be as a barometer of the economy. But economy moves in cycles. Of course, we also know that the business moves in cycles, and average business cycle is about 4 to 5 years. So it is natural that stock market cycle also moves in 4 to 5 years of periodicity. But what happens is the investor emotions, they exaggerate the stock market cycles at both the ends, whether it is upside or it is downside, both the sides. Due to the emotions of the investors, it gets extended. That is applicable during bear times as well as boom times. So we should all be prepared for this kind of volatility. It is going to be here because emotions cannot die down. Emotions were there 50 years ago, 100 years ago, and will remain not only in India, but in any stock market of the world. It will be there. And it is up to you how you take the advantage of those emotions. So now we are going to start question and answer session. Thank you for sparing your valuable time on Sunday. If someone has limited capital, let's say about 2 lakh, so how can he start with multi-bagger or any product? Yes, that is a when you are starting investment, you have got limited money, and with 2 lakhs, and I always recommend that one should not invest more than 3% on advisory services. Even in mutual funds, there is an expense ratio of about 2% or 2.25%. So in if 3% of 2 lakhs means 6,000 rupees, and multi-bagger service is 3,94,440 for 1 year subscription. So I would not recommend you to go for a multi-bagger service. Rather, you should start with either smart SIP or with smart gains. Smart SIP subscription price is 3,540, including GST, and smart gains, it is 5,900 rupees. So that would be the best course of action for you. Can you please explain your product SBP in detail? SBP stands for Smart Billionaire Picks. It is a part of Smart Gains. Basically, Smart Gains has 2 parts. Pick of the week. Every Wednesday, we recommend 1 stock. And second part is Smart Billionaire Picks. It is a basket of stocks started way back on 30th of May 2001. And with 1 lakh, and today its value is about 1.34 crores. That is 134 lakhs multiplied by 100. 1 lakh has multiplied by 132 times. That is Smart Billionaire Picks. Whatever stocks we advise, if it is advisable to average, then we shall definitely give you a message. How much money is required to start with Smart SIP to buy all? See, it is optional. It is not necessary that you have to buy all the present stocks in the Smart SIP. You can start afresh. So whatever, suppose you are subscribing today, so whatever advice you get on the 5th of next month, that is on 5th of January, you can buy that stock. So this was all about the questions from the chat box. If mid-cap stock has fallen by 15%, should we look the benchmark index as Sensex or mid-cap? See, if it is a mid-cap stock, then you can always refer to the BSE mid-cap index. If it is a small cap, then you can refer BSE small cap index. How you see EV theme overall in India? It is at a very beginning stage. It will take pretty long time to get the stability. You might have observed that there are a lot of two-wheeler companies in the EV sector which have their presence, which have already made the presence, but not all are going to succeed. Many of these companies don't have any experience of selling their two-wheelers. So it's going to be a very different ball game. Even it is not sure that the existing two-wheeler established companies will succeed or not in the EV game, because EV game is totally different. So it's going to be very challenging. Mr. Bharat Pendal, you can unmute yourself and ask the question. Yes, sir.
No.
हाँ सर, बताइए सर.
नहीं, कुछ नहीं पता है.
Okay. Mr. Mihir Modi, kindly unmute yourself.
Hey sir, how are you, sir?
Yeah, fine, sir.
Yeah, well, actually, my question was around that EV theme, which I pasted. So yeah, thanks for the opinion. And I think you are right. Actually, even the current two-wheeler, like for example, Hero MotoCorp, right? There's fallen from almost like 3,600 to now trending at a 52-week low.
Yeah.
So I think, yeah, the overall gimmicks of the market around this EV is changing and has started showing colors, basically.
Yes.
Yeah. Thank you, sir.
Thank you. How long should we wait to invest in any IPO in case we don't get any allotment? If you don't get any allotment, sorry, I'm not able to truly appreciate your query. How long should we wait to invest in any IPO in case we don't get any allotment? If you don't get any allotment, then maybe in a couple of days you will get back your money. And there is nothing wrong if you find any good IPO issue running, then you can invest in that. You no need to wait. And we also provide you the IPO analysis. In fact, we provide two kinds of IPO analysis. One is done by our marketing head, Mr. Kishore Purswani. He prepares a video of about 7 minutes, on an average 7 minutes, and he gives his opinion about the IPO. And also I also provide you my opinion, but that is not on through video, but that is on app or on our mobile app. You will find, or also you can find the opinion on our website. So that is how we do it. I'm sorry, not on website. It is available on app. So with this, we have come to the no questions, any more questions to be answered. If you have any questions, you can ask. आप हिंदी में भी पूछ सकते हैं कोई भी सवाल. It is not necessary that you need to ask in English only. हिंदी में भी किसी को कोई सवाल पूछना हो तो आप पूछ सकते हैं. Okay, will tapering impact market? See, that is a kind of a cycle. I can say that we are not anywhere near to the peak of the business cycle because interest rates have not yet started moving up. it is not only interest rate moving up, but they have to move substantially up. Then only we can say that we are near to the business peak cycle. And of course, there are indications even in India that interest rates are going to rise, but there is nothing to worry about. And why interest rates are going to rise is because of I think the prime reason is the inflation. And inflation is rising not because of the demand pull. It is mostly because of the cost push. The raw material prices are moving up, and there are reasons for that. It is not the shortage. Everywhere, it is not the shortage of the raw material, but it is the partly only the shortage, and because of the pending demand, and partly it is because of the issues regarding the container availability, regarding the shipping issues, regarding the lockdowns in various cities, in various countries. So most of these are all temporary. Recent tech companies listed valuations, do they worry you? And as I said, if I am not investing, then why should I worry? So you should worry what you are doing. You should know what you are doing. If you are investing in a loss-making company, and wherein the very first risk assigned is that we do not know when we will come to profit, then why you are investing in such companies? That is my opinion. I don't invest in loss-making companies. I invest only in positive profit-making companies which have got very good positive stories, which have got very good prospects. I invest only in those companies. And most of the tech companies, you might have found that we have given a no in our IPO. Okay. Okay, Mr. Mahesh Panchal. Yes, sir.
या सर, ये मल्टीबैगर स्टॉक में क्या मतलब फंडामेंटली क्या देखना चाहता है?
सर, किसी भी स्टॉक में हम लोग जो भी एडवाइस देते हैं उसमें दो चीजें देखी जाती हैं. एक तो फंडामेंटल यानी कि अभी तक की कहानी यानी कि आपने पिछले 4-5 साल में कैसे ग्रो किया है, पेंडेमिक के टाइम में आपने क्या किया अपने प्रॉफिट्स को बढ़ाने के लिए, मैनेजमेंट किस टाइप की है, प्रमोटर का स्टेक कैसा रहा, ये सब चीजें हम देखते हैं. या फिर आपने कितना इक्विटी और डेब्ट में से किसको आपने मैनेज किया ग्रो करने के लिए. सो दीज आर द थिंग्स, दिस इज ऑल पास्ट. इसको हम बोलते हैं फंडामेंटल. दूसरा होता है फ्यूचर. ये सब तो ठीक है, हमने पास्ट में इतना अच्छा किया, आपने फ्यूचर आपका कैसा दिखता है, फ्यूचर में आप क्या एक्सपेंशन कर रहे हैं, या फिर आप कौन से नए मार्केट में जा रहे हैं, या फिर आप कौन सा नया प्रोडक्ट लेके आ रहे हैं. सो दीज आर ऑल फ्यूचर्स. इन दोनों का कॉम्बिनेशन होता है, और बेस्ड ऑन दिस आप आज से 2 साल 3 साल 4 साल बाद क्या देखते हैं. दैट इज हाउ वी पिक द मल्टीबैगर. इस तरह से देखा जाता है. और इन सब के बाद मतलब पास्ट की जो स्टोरी है दैट इज द फंडामेंटल, और फ्यूचर की जो स्टोरी हम देख रहे हैं, इन दोनों को मिक्स करके हम एक वर्थ पे आते हैं कि स्टॉक का इतना प्राइस होना चाहिए. अब आपको देखना है कि आज क्या प्राइस चल रहा है. अगर वो प्राइस, आज का प्राइस उस वर्थ से कम है, देन इट इज ए टाइम टू बाय. इस तरह से मल्टीबैगर स्टॉक को देखते हैं. There is a request for conducting a webinar on how inflation and interest rate is affected to stock market. I think not that much of lengthy presentation is required. We will cover this in one of our forthcoming webinars. With the 5 minutes we will provide for this topic. Which business magazines do you regularly read? Okay. I read the magazines, almost all the magazines, and the purpose of reading the magazines is not to look for what they are advising, what stocks they are advising, but what is the news that is important for me. So if there is an interview of, say, HDFC Bank CEO, I will definitely watch that interview or would like to read what he has to say about his company, not about the share price. So my focus is always the story, future story. हम उस फ्यूचर स्टोरी से क्या समझ सकते हैं? HDFC Bank, Kotak Mahindra Bank, ICICI Bank, these are the leading, Axis Bank, these are the leading private sector banks, what they think of. और real estate में Godrej Properties हैं, Brigade Enterprises हैं, Shobha Developers हैं, what their CEOs are saying into the presentations में वो क्या बोलते हैं, क्या लिखते हैं, like that, all those things. So as far as the papers are concerned, I read Economic Times, Business Standard, Business Line, and also I have subscribed to the emails from various news agencies, so I regularly get the emails. That is what the content is same. What I read, what you read is one of more or less the same, but I try to read between the lines. I am more focused on that sectors where I have invested, that company's sectors prospects, that company's prospect, like that. What is your view on momentum portfolio investing? See, for that momentum, you need to know when you have to exit and when you have to enter. And my experience is that you cannot do that. So again, same question is being asked regarding the Ratan India EV theme. As I said, don't get too much excited about especially about the OEMs. It will take some time before the stability comes. You never know which EV player will succeed and which will fail. It will take some time. What best you can do is, as I keep on saying, that if you want a multi-bagger, then always go for a company which is engaged in B2B business, means business to business, rather than B2C. The company who are selling to the consumers are in general less rewarding than the companies which are selling the products to another business. What I mean to say is, if you are suppose if you are looking after an auto ancillary which supplies to 30 OEMs, if you compare that to a single OEM, then I would prefer the company which supplies to 30 OEMs. Likewise, in EV segment, there are some things which are very common, like shock absorbers will be common. Maybe design needs a change, but it is not a Herculean task. And similarly, the lighting will be same, wiring will be same, cabling will be the same players, mirrors. So, but batteries, it is a tricky issue. You never know. The existing stalwarts in the battery segment, they can manufacture the batteries for EVs. I have still doubts. So you have to be very careful. We have recommended a couple of stocks from EV perspective also, and they are doing reasonably well. One is doing pretty well, already up by 60%. Pharma sector is doing pretty poorly, even when there is a profit growth and sales growth. The rate of growth is the most important thing, and the rate of growth of sales as well as profits have slowed down for most of the pharma companies. There are two reasons. One is the increase in raw material prices, and secondly, because of the pricing pressures, especially in the US market. So with this, we have come to the end of today's presentation. Thank you very much once again. Have a good day.